So hi friends, a very good morning to all of you. Welcome back. So today we are going to start with another beautiful, logical and very important standard from exam point of view. So repeatedly questions are asked from this area and the title of this standard is Ind AS 102 Share Based Payment. What is this? Ind AS 102 Share Based Payments. Now tell me one thing. In Indian GAAP, before this Ind AS era, do we have any accounting standard for share-based payments? Before this Ind AS 102, in previous accounting standards, you might have seen accounting standards 1 to 29, isn't it? So have you seen any accounting standard for share-based payments in the old accounting? The answer is no. But you have done ESOP accounting in your CA Inter, isn't it? You have done ESOP problems, no? Share-based payments to employees. Okay, ESOP, employee stock option scheme. You have done that. That was a guidance note. That is a guidance note. Now also that guidance note is there. So previously, whenever you are issuing shares as a consideration for receiving services, including employee services or any other services, or you are issuing shares and purchasing any asset, it could be inventory, it could be property, plant and equipment, it could be land, or you are contributing equity shares. Previously, there was no guidance on it except a guidance note issued and SEBI guidelines were there. SEBI has given some guidance when a listed company is issuing shares in consideration other than cash, not in mergers and acquisitions. If you are giving it to your employees, so how to treat that? SEBI guidance is there. ICA has issued guidance note, but the problem is that guidance note covers only employees. What about third party? I have purchased land and I have given shares. So I have purchased property, plant and equipment or land. That part is covered by Ind AS 16, property, plant and equipment. For example, when you purchase asset and issue shares, what is the journal entry you write? Asset account debit to equity share capital. So asset account debit, that is taken care by Ind AS 16, but poor credit to equity share capital to securities premium. Who is dealing with this? No one is dealing. They felt bad. So they went to ICI and asked, sir, no accounting standard for us, sir. Please, sir, we are also big people, sir, not small people, sir. Please do something for us, sir. Then ICI said, don't worry, we will issue some beautiful standard for you. So globally IFRS 2 is there, share-based payments. So in same lines, ICA has issued share-based payment, which not only covers shares given to employees, but also covers shares given to any party. So it is a broader umbrella. Now, to those companies to which Ind AS are applicable, they have to do accounting as per Ind AS 102 if you are issuing shares. So all the ESOP, all the transactions where shares are given as consideration for purchase of goods or for purchase of services, they will be covered from now onwards as per Ind AS 102 for those companies to which Ind AS are applicable. Now the question is, Pavan sir, what if there is an entity? What if there is an entity to which Ind AS is not applicable? They continue using that guidance note. So they do old accounting only. Whatever you learned in CA Inter, they continue that. To those who are preparing financial statements in compliance with Ind AS, then welcome to 102. Before going into the scope, before going into discussing the meanings and all this stuff, I'll give you one practical situation. See, this share-based payments to employees, they are very common. Okay, share-based payments to employees, they are very common. So you look at the biggest of the enterprises like Google, Microsoft, major component, not small, major component of the salary of the package of, you call Sundar Pichai or Satya Nadella or any Elon Musk, any CEO of the company, whether he is a promoter CEO or outsider, major part will be ESOP. Major part will be shares. So, for example, if Sundar Pichai, in terms of Indian currency, if he is getting 500 crores per annum. For example, sir, will they get 500 crores per annum? Elon Musk is getting 1,500 crores, but of course in Indian currency, okay. Highest paid CEOs now, big guys. Imagine per annum 500 crores remuneration. Your spine will shiver if it is 5 crores for you, isn't it? I myself have not seen 5 crores package per annum in my career, okay. So, anyway, so major component will be given in shares. So logically, what Google will do, dear Mr. Sundar Pichai, will give you these many shares. Say 1 million shares of Alphabet will give you, 1 million shares of Google will give you, with a lock-in period and with the terms and conditions. The terms and conditions could be the market price of the share should go to so and so, the revenue should touch to so and so, the operating profits should touch to so and so, the net profits should touch to so and so benchmark, the return on investment should touch to so and so benchmark, or you should be in service for 10 years, or non-competing clauses. Once you relieve from the services from Google, next day you should not go and join our competitor company. So there are various conditions upon which I issue shares to you. Logically, imagine if I am Google, or if you are Google, I am Sundar Pichai, you are issuing some 1 million shares to me. What if I will sell the shares tomorrow? Understand the impact in the market. In the market, imagine if the CEO is selling shares, how bad or how negative it would be, isn't it? Today, imagine if CEO of the company himself is selling shares when he is continuing to be the CEO. Market takes it negative now. That is the reason they say some lock-in period should be there. So I will give you 1 million shares, but you cannot sell it now. You will have it for 5 years, 10 years. After that lock-in period only, you will be able to sell it. So this is one. So Pavan sir, is it applicable only to major entities or global entities? No. Even public sector enterprises in India will issue shares to employees. Like this ONGC kind of companies, they also will do. So Pavan sir, it is only for that kind of listed companies or public sector entities or major companies? No. I have personally seen in my own life. Imagine there is a startup. So it is a real life example I am telling you. Some 7-8 of my friends, cousins' friends. I have a close friend. He has a cousin. His team from Infosys. They are employees from Infosys. All of them are engineers. They wanted to resign the job. It was some 3-4 years back. They wanted to resign the job, and they have some startup. So this Telangana government, they are giving so many incentives for startups and all. So the Chief Minister's son announced, in Telangana, if there are software startups like this, we'll give incentives. Because he was ex-employee of Google. He's a techie guy. So they are encouraging technology startups. So all these people, they have decided we'll resign the jobs and we'll do some startup. And they wanted one CFO. But the point is, you are employees till yesterday. You have very minimum amount you can pool as money in terms of money. You are pooling expertise and your technological knowledge. That is a different story. But if you appoint a CFO, a decent CFO with 5 years, 10 years of experience also, he will not come unless you pay 1-2 crores to him. Unless you pay 1-2 crores to him, he will not come. So what is the option to these people? They don't have. So they will give a very minimum salary. Say for example, 75,000, 1 lakh, 1,50,000 per month. So they'll ask one guy who is a CFO material, sir, we can give only 1 lakh rupees per month to you. Can you please work? Now that guy will ask, why will I work? Simple. They will give you some equity. That equity can be 1% in the company, 2% in the company. So the thought process is like this. If you are that prospective CFO candidate, if you believe in the product, first they'll give you the demonstration of startup. So with your business acumen, even you understand venture capital and private equity. Okay, I have seen all these things in my real life. So even if you are exposed to venture capital and private equity, you understand whether this concept works or not. Then if you believe in the concept, then you will join as CFO and you take only 50,000, 1 lakh rupees as salary, and the target is within 3 years or within 5 years, you need to get the venture capital and you need to show the, valuations. You'll prepare the valuation sheet and you'll do all the things which are required to bring that valuation, and the valuation will be, imagine, some 100 crores. 100 crores valuation is actually very less amount. Why? I'll tell you. Any venture capital fund or PE fund, they will not involve if your value is less than minimum 20 to 30 millions. 20 to 30 million dollars in Indian currency is more than 100 crores. No, $1 million is around 7 crores. So $10 million itself is 70 crores. So even small private equity fund or venture capital fund is interested in your concept also, you'll become bloody rich. Now imagine if this CFO can give investor presentation, if the product has fundamental strength, if the project is good, if it is scalable, if you can get one investor in 3 to 5 years, you can get 500 crore valuation or 200 crore valuation. In that, imagine if 2% is yours, 5% is yours, 10% is yours. They'll give some incentive, no? So you'll work for that variable component. That is nothing but ESOP, no? The company is giving ESOP to employee based on some performance condition. Their performance condition is the valuation of company should go up to that level. So in my examples, through my examples, by this time you might have understood that whether it is Google, whether it is a public sector enterprise, or whether it is a startup, employee share-based payments is a common phenomena, and it will be like this forever till the business continues. It was, it is, and it will be the buzz. There is a story which I cannot verify whether it is right or no, I do not know. There is a story. It says in Apple, when they started Apple, they started in a small garage, it seems. So they wanted some guy to paint the garage and to do some basic interiors in 1960s, 70s, I do not remember exactly when. So these people approached one painter, a normal person who paints the walls. So he said, "Arey yaar, ye painting kar do please." He quoted, "Itna chahiye, these many dollars I need for this contract." They said, "Hey, we don't have money, we'll issue some shares to you." That guy said, "Pagal ho gaya. You do not have any business. Now you are starting up small business. Why will I take shares in your company and why will I paint? Not required, go." So these people persuaded him, "No, please do that." And also finally he is convinced and he has done that and he took the shares. I don't know whether this story is correct or no. Later, these shares given to the painter those days were valued at $1.4 billion. In Indian currency, it is bloody 10,000 crore rupees. If at all this story is true, imagine if you are the painter. 10,000 crores, dude. And the 10,000 crores valuation is the equity in Apple, which is doubling every 2 years. After 2 years, it will be double. After 3 years, it will be double. That is the story of Apple now. So in 1970s and 1980s also, they have done share-based payment. So one service provider who is just a painter, so carpenter work, painter, plumber, so you are able to convince him that, "Anna, I cannot give you money, I'll give you equity shares tomorrow. If I am big, you will be big." Indian carpenter may not agree, but if the carpenter has financial literacy, maybe if he agrees, maybe if your company grows, the carpenter also will become bloody rich one day. So what I'm saying is, share-based payments are pretty common. Share-based payments are pretty common. Even sometimes what happens, right? A company is in financial difficulty. They need to turn around. So for turnaround, they approached a consultant. So one very big marketing consultant or management consultant came for turnaround of the company. He said, "I need 10 crores remuneration." The company will say, "We do not have money to pay to peon, housemaid and basic 4th level employees also. We do not have 5 lakh rupees cash in hand. That is the reason we are approaching you for turnaround strategy, because we are in difficulty. If you ask 10 crore rupees, how can I give?" So how the consultant works, you know, consultant says, chalo, I will turn around the company. Today your company value is 2 crores. I will turn around the company. I ensure that it will be 200 crores. Will you give 10% equity to me? The company happily gives, no problem. So he will provide all the consultancy services. It could be legal structuring, it could be internal reconstruction, it could be financial reconstruction, it could be, you know, demergers, it could be some activity what he has done, and he lived with the company for 2 years, 3 years, and he made an impact, and then the company actually started doing well. Then after turnaround, you will give 10% equity to him. That is also 1 or 2 only, no? Share-based payment you are giving to consultant. So with all the examples, what I am trying to explain to you is these share-based payments are not something hypothetical, are not major big things what you imagine. They are pretty common in the business, in the regular life or activities of the business. Share-based payments are pretty common. Share-based payments are pretty common. Now, I ask you one question, tell me, after this we'll go to the standard. So, there is a company by name X Limited. In this X Limited, there is an employee, Mr. A. In X Limited, there is an employee, Mr. A. So, one fine day, X Limited called Mr. A and said, Mr. A, we are very happy because of your services. You are such a good employee. We want to give some appreciation, we want to give some, that token of appreciation and token of love is there, no? Like that, some token of love we want to give it to you. So we are proposing this. We are issuing share to you. Our company's market price of share is rupees 500. But because we love you so much, because you have been working very hard in our company, we will issue shares at 75 rupees to you. We'll issue shares at 75 rupees to you. Give 75 rupees, take one share, 500 rupees per share. Mr. A is excited and said, sir, thank you so much. I would love to buy this share. So A purchased the share. You have given option, the counterparty exercised. You have given the option, the counterparty exercised. So he gave 75 rupees, you have given a share to him. How will you record this? Will you record cash account debit 75 to equity share capital 10 to security premium 65? Is this correct journal entry, or cash account debit 75 to equity share capital 10 rupees to security premium 490, and there is a difference. What is the difference? 425 rupees. Employee benefit cost to me, or in simple terms, in your language, salaries. Why employee benefit cost, which is very heavy word? So in India we call it salaries, no? So shall I write salaries, employee salary account? Debit. Now you tell me, this is journal entry 1, this is journal entry 2. Which journal entry is correct? You tell me. Which journal entry is correct? You tell me. 1 or 2? So everybody is saying 2 is correct, 2 is correct, 2 is correct. Mansi, Ritik, Nirmal, everybody is saying 2. Yes, okay. 2, correct. Option 2 is correct. Why? Basic common sense. This is legal reality. This is economic reality. This is economic reality. Why am I issuing shares worth 500 to a person for 75? Is it that I love him? Is it that, out of my natural love, affection and fellow feeling I am giving this? Is it charity? Hello, even if you do charity also, one or two applies. That is a different story. But I'm saying, why am I giving this 500 rupees worth share to this guy only at this amount? Is it that just I love this guy and I'm giving it? Any non-monetary or non-economic consideration? The answer is no. The answer is definitely no. Now, what is the reason? What is the reason why I am giving this? Why I am giving this is because he already rendered services to me. So I have, for the past performance of the employee, in 2020, if I am giving this. So today we are sitting on what day? 28th Jan 2021. If I am issuing, oh, in 2021 already 1 month is also over. Super, no? Days are running so bloody fast. So today I am issuing share to him without any condition for the future. Did I say, Mr. A, will you work another 2 years in my company? No, I did not ask. Mr. A, can you achieve our share market price so and so? Can you achieve this target? No targets, no conditions. That means, why am I giving? I am happy about the past performance without attaching anything to the future. So here in P&L account, I need to record a cost of 425 rupees. This 425 rupees is salary I am paying to this guy, but the salary I am not giving in cash. That salary I am giving in terms of share. That's all. That is the basic common sense. Makes sense? That is the reason this is economic reality. This is legal form. Therefore, in Ind AS 102, again we honor the concept of substance over form. If you write a journal entry for the form, it will be first journal entry. But if you write the journal entry for substance, the economic reality, the journal entry will be second journal entry. Is the reason we pass second journal entry and first journal entry is wrong. You understand? So with this introduction, with this little bit of background, welcome to Ind AS 102. So shall we start? Shall we start with Ind AS 102? So look here, this is the overall topography. So what they are saying, share-based payment transactions are there. Very good. Pavan sir, what is share-based payment transaction? Dekhenge bhai, don't worry, we'll see that. Share-based payment transaction, we'll see. So if there is an agreement between two parties, party 1 is entity, party 2 is counterparty. Party 1 entity, party 2 counterparty. Pavan sir, can this counterparty be employee? Yes. Can this counterparty be supplier of services? Yes. Can this counterparty be supplier of goods? Yes. So you entered into an agreement. Now the question is, Pavan sir, I signed agreement today. Do I start accounting today? Shall I recognize the transaction? If at all, yes, this is the recognition event. So I need to record. Then what is the measurement? Then how many types of share-based transactions are there? Will it be settled in equity? Will it be settled in cash? Or will there be an option? Can the supplier choose, I want cash or I want share? Can the employee choose, I want cash, I want share? Or can the company say, I'll give you cash, I'll give you share? And how to disclose? And if there are transactions between group entities, parent company employee is given options to buy subsidiary company shares at a discount, means at a price lower than the face value or lower than the market price. They are also covered. So all these things we'll discuss here. All these things we'll discuss here. Okay. Now look here. So first recognition, second one is types of share-based payments. So you might have already seen this in your CA Inter. How many types of transactions are there? 3 transactions. What are they? Equity settled, cash settled, then equity settled with cash alternative. You remember, first one is equity settled. I will give you share. Second one is cash settled. I will give you cash based on value of share. Classic example, stock appreciation rights, SIR we call. So I will pay cash to you finally, but how much depends on share price. That is called cash settled. So finally, if I issue shares, it is called share settled, equity settled. If I pay cash, it is called cash settled. Pavan sir, I have given option to my employee. Either take cash worth 1 lakh shares or take 1,25,000 shares. So after 5 years, you have the right. Pavan sir, give cash equal to that 1 lakh shares. Okay, Lelo or Pavan sir, give me 1,25,000 shares as per the agreement. So as per the agreement, I have written that, dear Mr. Employee, 5 years work in my company, achieve these kind of performance targets, service targets, vesting conditions we call. After that, you are entitled to choose. You may elect, you have an option to elect A, cash equivalent to 1 lakh shares, or B, issue of 1,25,000 shares at so and so price. After 5 years, when the exercise date comes, that day you see what is cash, what is this. This is benefit to me or this is benefit to me, and you will choose one option. That is 3. Share-based payment transaction with the cash option, with the cash alternative. So read this diagram. So what is that? So share-based payment transaction is there. You are receiving goods or services. It can be goods also. You are receiving goods or services. Now, Pavan sir, 100 units of product X bought, 10 shares given. Is it covered in 1 or 2? Yes. 100 units of product X bought from one supplier. And you said, I'll give you 10 shares. He agreed. Will it fall under 1 or 2? The answer is yes. Will you record a transaction at the fair value of the product or the fair value of the share? You tell me. Will you write the journal entry with the fair value of the product, or will you write the journal entry with the fair value of the share? Imagine the fair value of each product is 10 rupees. So 100 units into 10 is 10,000. Imagine the fair value of share is 90 rupees. Fair value of consideration given is 10 into 90 only. That means 9,000 only. So you are getting 10,000 fair value worth goods and you are giving 9,000 worth equity. What should we do? Transactions measured with reference to equity instruments granted. Then vesting conditions, imagine 5 years. After 5 years, I have to issue shares. After 2 years, I changed the plan. Employees accepted because that is more beneficial to them. Or maybe in amalgamations, I have joined hands with another company. The other company gave a better plan to my employees. Like, Future Group already has given some ESOP. to some of their top level personnel, KMP. Future group directors will get some shares in the company. Now Reliance taken over it. Now Reliance gave a better plan. So obviously all these employees will agree for cancellation of one plan or modification of one plan into another plan. How to account for it? That is third step. Then cash settled. So determining the fair value of equity instrument granted, treatment of reload feature. What is reload feature? We'll see. Don't worry about it. Then treatment of conditions. There are two types of conditions: vesting conditions, non-vesting conditions. And there are service conditions and performance related conditions. In performance related conditions, again, market related conditions are there, non-market related conditions are there. So if you read CA Inter properly, if you have studied CA Inter properly, majority of these things you might have seen in CA Inter. But normally you will not read theory to that depth. So we'll see what all these things are. So if the fair value of equity instruments cannot be estimated reliably, then what to do? All these things will learn. Now, Pavan sir, there are some kind of ESOP. There are some instruments, equity instruments. There are some arrangements, share-based payment transaction with cash alternative. Cash alternative is an option. Option means either I can choose the shares or I can choose cash. Now the question is, who will choose? Will company, the entity who's the issuer, will the entity choose, or will the option holder or the counterparty chooses? So who has the option? I said there are equity share-based payment transactions with cash alternative. Either you can take cash or you can issue equity shares. Is it an option in the hands of company or is it option in the hands of counterparty? Will I decide whether I will give you cash or I will give you equity share at the end of 5th year, or will you decide whether you want cash or you want equity share? Both are possible. So look at these two boxes. Share-based payment transactions which provide a counterparty with a choice of settlement. Share-based payment transaction which provide the entity with a choice of settlement. So in one situation, counterparty has the right to choose. In one type of transaction, entity has the right to choose. So after all these things are done, you will have beautiful disclosures. That's all. Then this standard is over. Once this standard is over, what will we do? Go to financial instrument. Okay, you understand? So read the first para. Already we have covered this. Only it is a formality. You reading this is only a formality. Now Chintu will get it out. Sorry, too much of theory is boring, sir. Morning 6 o'clock, start the class and teach this much of theory. Then we'll sleep, sir. So please, we'll do some problems, sir. Yes, we'll do some problems. Now Chintu will get another doubt. You have not started anything. Just introduction is over. And the route map for the whole standard is over. Will we be in a position to solve any problem? We'll see. I'll start with some basic problem and let me test how much you remember. Will you be able to do this or no? Based on that, if you are unable to do, anyway, I am there to help you out. Correct. So let us go and solve one problem. Reliance Industries. Starting Reliance Industries. This is the question, or else we'll start with the question. Problem number 4. Equity based payment, purchase of goods. Goods can be assets also. Good need not be only inventory for trading. Goods covers any kind of asset. It could be land, it could be property, plant and equipment, it could be building, it could be a factory, but not in business combination. Okay, If you are doing it in business combination, then issuing shares and buying group of assets as a part of business, then you are not covered in 102. My elder brother is there. 102 above, 103 is there. No, go to 103. You are buying a good or an asset. Consideration paid in share. Then welcome to 102. Read the question. Indian incorporation issued 995 shares in exchange for purchase of an office building. Wow. The title was transferred in the name of Indian Incorporation on Feb 2011 and shares were issued. Fair value of the office building was rupees 2 lakhs and the face value of each share of Indian Incorporation was 100. Pass the journal entries. Pass the journal entries. Hello. Pass the journal entry and tell what are you looking at? Are you pass or no? I will not pass journal entry. You will pass this journal entry. You will sit and enjoy. Tell me the journal entry and then we'll go to next part. Very good. Everybody has given correct answer. I'm happy. So office building account debit. How much? 2 lakhs. Fair value of the asset. 2. Equity share capital. So how many shares are given? In our example, how many shares are given? 995 shares of 100 rupees face value. 995 into 100. So how much it will be? 995 into 100 is 99,500. 2. Securities premium account. Balance. 1,500,000. 1,500,000. Being building purchased by issue of equity shares. Share-based payment transaction recognized. That's all. So office building 2 lakhs. Fair value of the asset is clearly given. Fair value of the asset is clearly given. Fair value of equity instrument is not given. Fair value of equity instrument is not given. Face value is given. But why will you record journal entry at face value? Okay, even as per your Ind AS 16 also, the accounting is same. When an asset, PPE or even investment property or even inventory or even intangible asset, everywhere, whenever you are buying an asset, buying a good, buying a service and giving share, the accounting is same. There is no conflict. And even in your old system of accounting also it is same. Sir, if I am not applying Ind AS 102, if I am applying old accounting, same journal entry you will pass. Asset account debit to equity to security premium. Okay, if the fair value of the consideration given is clearly determinable, then you will write the transaction at fair value of the consideration given. But in this question, office building fair value 2 lakhs is given. What is the fair value of equity is not given. So this is problem number 4. Shall we do one more problem? We'll do problem number 5. Reliance Industries. Put a star mark, important. Reliance Limited hired a maintenance company for its oil fields. The service will be settled by issue of 1,000 shares of Reliance. Period for which the services is to be provided is 1st April 2011 to 1st July 2011. And the fair value of the service was estimated using market value of similar contracts. The fair value is 1 lakh. Nominal value per share is 10 rupees. Record the transaction. Beautiful question. Hello, put a star mark. Read the question once again. Tell me the journal entries. So everybody is giving The answer: maintenance account debit 1 lakh, to share capital 10,000, to security premium 90,000. All the answers I have received are, all the answers are same. But guys, look here. You are entering into contract on, you're entering into contract on 1/4/2020. And the contract is for 3 months: April, May, June. In July 1/7/2020, you will issue shares. So today contract is entered into. Today contract is entered. Do you think this April, May, June, accountant will sleep and he will wake up at the end of June and he will pass the journal entry here? Don't you think that is cash accounting? What is the meaning of accrual system of accounting? The contract is for 1 lakh. The service period is 3 months. That means per month maintenance cost is 33,333 rupees. So you record expenses here, here, here. 3 journal entries. Then you issue shares here, 4th journal entry. Don't you think this is correct accounting? Do you think what you have done is correct, or what I am explaining on the board is correct? Obviously, Pavan sir, if we are telling one journal entry and you are telling another journal entry, common sense, what journal entry you said only will be correct, Pavan sir. So do you understand? We need to pass 3 journal entries for recording expenses. And then finally we pass the last and final journal entry for issuing shares. You understand? So what will we do? We pass 3 journal entries for recording expense. We pass last journal entry for issuing. Right now, journal entries in the books of Reliance Industries. Journal entries in the books of Reliance Industries. Under that, particulars, debit rupees, credit rupees. Today I saw one meme, okay. So it is the status, WhatsApp status of one of the students. CA final student. So it is, why am I single? Question mark. Many guys came to me, many girls came to me and asked, hey, tell that 3 magical words. Then I said particulars, debit, credit. So that is the reason still I am single. Nice, no? Okay, right now, repairs and maintenance account debit 333. 2. Now you tell me, what should I write? Should I create a liability or should I create equity? If finally I pay in cash, this you might have studied in your CA Inter also. Finally, if I pay cash, I will create a liability, equity, share-based payment liability. If finally I issue shares, I'll create reserve, equity, share-based payment reserve. Now you tell me, should I create a liability account or should I create a reserve account? Hello, tell me. 2. Very good. Share-based payment reserve. Correct answer. Why will we create a liability? Because I know that I am going to issue shares to him, no? You understand? So 33,333 being share based transaction. Share based transaction, expense recorded. Being share based payment transaction, expense recorded. Okay, so when will I pass this journal entry? Put date also. Date. So on 1/4, 1st April. Oh no, 31st, 30th April. At the end of the month we'll write. On 30th April. So then 30th May. 31st May. 31st May I will pass same journal entry. Then once more Pavan sir pass same journal entry on 30th June also. Very good. Then 1st July will pass. You tell me. Hello guys, you tell me what is the journal entry I'll pass here. This is just revision of what you have learned. Okay, I am not teaching anything new. These are warm-up exercises. Once your warm-up exercises is over, then I'll go to final level. So tell me, what is the last journal entry? Equity share based payment reserve. Or you can write share based payment reserve. 1 lakh. So we can write 33,334 here. Or you need to write 33,333.33 every month. Even if you write 33,333.33 every month, the last month you will write 33,333.34. No, so same thing. I have rounded off rupee. So equity share based payment reserve 1 lakh. To equity share capital. How much? Equity share capital. How many shares are issued? 1000 shares of 10 rupees each. 10,000 to security premium account. 10,000. Either you can do 10,000 into 90, or you can say the balance 90,000. You understand this? Being shares issued. Shares issued as per the contract of share based payment arrangement to service provider for providing maintenance to oil fields. That's all. Being shares issued as per the contract of share based payment arrangement to service provider for providing maintenance to oil fields. So guys, are you done with this? You understand these journal entries? Simple accounting, right? So are you done? Hello, response please. Once you are done, can we move further? So look here. What are the guiding principles for this? Cash alternative, we'll come back to this later. When the entity has a choice of settlement, this also will come back later. Cash alternatives we'll do later. So share-based payment, purchase of goods, purchase of services, we have done 4th and 5th problems. Cash alternative again we'll do later. Conditions also we'll do. Effect of conditions, okay. So guys, till now whatever the accounting we have done, do you understand these journal entries? So if you understand these journal entries, we'll do one thing, we'll take a short break and come back. We'll take a short break and come back. After that, we'll enter into the real 102. Okay, any doubts so far?